The comics has nothing to do with gold. That is simply a casino where gamblers place their bets on the gold price. So I don't know why that has anything to do with fixing gold price or anything to do with gold whatsoever.
Hey guys, thanks for tuning in. I have an exciting call for you. I haven't done a gold-silver talk in quite a while, so I decided to get Bruce Bragagnolo on. He's the chairman of Inca One Gold Corp. He's the real deal. We're going to talk about gold. Bruce, how are you?
Very good, thanks, Sean.
Hey, thanks for coming on. I want to just ask you right out of the gate. Inca One is a gold milling company, so you guys process the gold. So you don't have to get out there and you don't have to search for it. You don't have to do the exploration. You don't have to pull it out of the ground. You're in the business of milling the stuff. What are your impressions today as we're having this discussion with gold at $1,174 an ounce? It just seems like the beatings are going to continue until morale improves, huh?
Yeah, right. Well, it's certainly gut-wrenching right now to see what's happened in the gold sector. But, there's a lot of analysts that I follow that were calling for a drop into this level and a big bounce right back off it. So I certainly hope that they're true. I mean, when I was looking at their predictions back in, I guess it was late September, middle to late September, and actually some even back as far as August, when they predicted that we would hit these levels, I thought there was no bloody way, right? But your instinct is to continue with the trend, and the trend at that time was flat to up. But since then, sure enough, some people have better predictive abilities than others, and here we are. So I guess I guess you got to follow some of the analysts, and you've got to be aware when they're calling for lower, for a big correction, which takes you to levels that you didn't think possible when the market's going well. The good thing is that all of those analysts predicted that if we can maintain these levels now, we're going to go much higher in the next few months. We should get a big bounce off of this and go higher. So they're still sticking with their original projections. They're shaken and stirred, but we're still calling for a bounce off the bottoms here. And I don't know exactly where the bottom's going to be, but it bounce off the bottom and then it move up.
We do talk a little bit about technical analysis in some of the interviews I do, but we've kind of thrown it out the door to the degree that some days, Bruce, as you well know, some days we'll see $4-5 billion of notional gold, paper gold, thrown at the market. We'll see this thing crash $20-30 in a minute because the banksters just throw paper at the price. So technical analysis is kind of thrown out the door when you know that there's this much manipulation going on behind the scenes, and you're in the business of dealing with the real stuff, the physical stuff. How precious is it in your estimation? How precious is the physical stuff versus the hypothecated and rehypothecated paper stuff?
Oh, don't get me going on the comics. I mean, the comics has nothing to do with gold. That is simply a casino where gamblers place their bets on the gold price. So I don't know why that has anything to do with fixing gold price or anything to do with gold whatsoever. It's just the claims. I haven't checked the number of claims on each ounce of gold in the comics, but I think they're well over 500 now. So 500 to 1. So I don't even, I think the COMEX is a very faulty mechanism for pricing the real physical, tangible gold. And let's face it, to me, buying paper gold, it defeats the whole purpose of it. And you can find any number of commentators to comment on that one better than I can. But yeah. There's no reason to own a paper gold or claim on gold. You want the physical thing in your hand. That's the whole purpose of it.
Yeah. All right. Well, you're a kindred spirit. We're speaking the same language here. The COMEX is a casino. That's a great quote. And let me ask you this then. On the evening of the election, it became clear fairly early in the night that Trump was going to win, and we saw markets sell off big time. I think at one point futures were down near 1,000 points. Gold was up near $100. And then in short order, everything turned around. So on one hand, we have the street, or the powers that be, telling us that Trump means devastation for the stock market and means soaring gold. And then within 24, 48 hours, everything had reversed. Gold was back down. The stock markets are through the roof. What's going on here?
Don't ask me. I really don't know. There's talk about the war on cash in India having something to do with it, but those are all backstories. I think it's all technical. The algorithms control trading these days. High frequency trading controls it, and I think as soon as they get some type of a flashing signal, they all pile in on it.
Right.
And I think it's actually the opposite of what you think these days. For example, everybody's fearing the rate hike, whether it comes or not. It's fully priced into the market right now, any market, I would guess. But when it happens, it may actually be good for gold, because then all of a sudden it's done. I don't think the U.S. economy is strong enough to sustain any further rate hikes, if there is one. I don't know if there even will be a rate hike. Mm-hmm. If there isn't, certainly the gold price will reverse dramatically. It might reverse dramatically anyway. Mm-hmm. You don't know anymore. It's all about. I think it really is these days all about technical trading, not fundamentals.
Well, yeah.
Fundamentally, there's a lot of demand for gold.
Oh, there is. And technically, the HFT, the high frequency trading, you hit the nail on the head. I mean, we're not talking like technical traders like guys like me and guys like you sitting around manipulating. We're talking about Wall Street insiders, hedge funds, high frequency trading, using the algorithms to set the market price where they want to set the price. Okay, you mentioned India, and I want to get there in a second. India going cashless. I think that's a very important story. I want to ask you about that. But let me read you this from Peter Schiff as it relates to the U.S. dollar. One of the reasons I think we're seeing gold priced at, as we talk today, around $11.75 in U.S. dollars is because it's priced in U.S. dollars. If you're dealing with some of these other currencies around the planet, the price is much, much higher in those currencies.
Sure.
And in many cases, hitting all-time highs. Right now, the dollar is, quote-unquote, some safe haven. Peter Schiff wrote on Thursday, increasing the maturity on the national debt is good, but it will add hundreds of billions to annual budget deficits. How will we pay for it? And he followed that up by saying, if Trump's nominee for Secretary of the Treasury is serious about lengthening the maturity of the national debt, QE4 is going to be huge. These are the things we now need to consider. As this nation's $20 trillion in debt, and that's just the stated debt, guys like Peter Schiff, guys like John Williams, the smart folks out there that crunch the numbers are worried about the potentiality of hyperinflation of the dollar. Because apparently the plan now is just to print.
Well, I think Peter Schiff is a very knowledgeable guy. But you look at you look at all the markets right now. The U.S. dollar has really been on a tear since the election. The U.S. stock market has been on a tear, not for any real reason, just that technically, I guess it's time to be on a tear. So you'd think that those things would, that those two indices would come back to a mean, and hopefully gold will come back to a mean as well. So you get, we got overbought conditions in some of the indexes and oversold in gold. So really it takes a real gut check right now to be buying gold, but some people are saying that this is the bottom and this is the time to get in. So it's just very gut wrenching. But every time it gets, it's almost like the powers that be that impact the gold price, whoever they might be, want to inflict the maximum pain on people.
Yeah. And
this might be the maximum pain right now. Some of the ETFs are in very bad positions relative to the gold price right now. So you think this would be a good time to be buying, but it goes against investor psychology, of course, that to buy at the buy at the bottom, because you're paralyzed with fear basically. But this is the type of reaction that the big banks, the so-called smart traders that trade on the equipment of traders, you see the reports every week. I mean, they're all out of the short trade now, and they're into the long trade, and they're going to be making a pile of money on the way up here. So I really hope that this isn't the end of the gold market, because that would be a real victory for the central banks. Yeah. They're really trying. That's the biggest problem right now. is that the central bankers and the big banks, they don't want to see cash. They don't want to see gold. They'd rather push us all into electronic money so they can just keep printing without anybody really seeing the impact of it.
Yeah, no.
I think there's going to be a pushback. There's got to be a pushback on that. And I don't think the Indian populace is going to let anybody, basically confiscate their gold. So there'll be a revolution there. So I think we've hit a lot of very negative factors for gold all at once, and I think we're going to start seeing some pushback here. So hopefully that'll happen sooner rather than later.
Yeah, I can assure you this is not the end of the gold market. I mean, and here's why we know that. Those of us in the know understand that the central banks are trying to get as much gold as they can. Russia, China, trying to get as much gold as it can. Germany wants to have its gold back, that the New York Fed is certainly dragging its feet in delivering the gold back to Germany. And you mentioned India going cashless. So we know what a manipulated situation this is, manipulated on a global level. The IMF, the Bank of International Settlements, getting these puppets to try to get their populations, force their populations to go cashless. In this case, Modi, making the Indian people go cashless, thereby hurting the Indian people, and then telling the people this is our opportunity to go digital, which means what?
That's ridiculous.
Completely unaccountable.
They don't have phones. A lot of them don't have phones. They live in rural India where they don't have the infrastructure, and now you're telling them that all of their transactions will be done digitally.
Yeah,
there will be a revolution in India before these policies ever get implemented.
Well,
really, the cash, the notes that they're trying to take out of circulation, they're a $10 and $15 note. They're nothing.
Right.
They're not $1,000 or a $500 or $100 note even. So, I think this is all going to backfire on Modi, and the sooner the better, as far as I'm concerned, because I do think that it has had some impact on the gold price in a negative way.
Let me ask you this. I have a thesis here that I shared with my friend Dave Kranzler the other day as it relates to this going cashless movement. Of course, this is being manipulated and forced upon the people by the banksters. Australia is now beginning to make moves to go cashless. And I said to my friend Dave the other day, it seems to me that the move to go cashless in the West may happen much quicker than any of us thought it would happen or wanted it to happen. We see Larry Summers saying we should ban the $100 bill, and they always say it's in the effort to curb corruption, which is ridiculous because we know the most corruption is at HSBC, Wells Fargo, J.P. Morgan, the biggest banks on earth is where the corruption is in the drug money laundering, for instance. But I said to Dave, I said, if they can force Western populations to go cashless, my thesis is this: they can then, in the future, turn us all into serfs so much more easily, because when there's no paper money, what will the measure of real wealth be, Bruce? What will the real measure of wealth be when all you have is ones and zeros on a computer that they can manipulate endlessly or just shut off completely? And my thesis today was the only measure of wealth and the only wealthy people will be those who have physical silver and physical gold, which is in this country less than 1%.
Yeah, it's true. When you look at it, they could take. Actually, a cyber thief could take those digital entries away from you in a flash.
Yeah.
I saw a great quote from Ayn Rand the other week. It says, "You don't really own something unless you can stand on it and defend it with a gun."
Yeah.
And I thought, wow, that'll really resonate with most Americans. Actually, a lot of Canadians too.
Yeah.
But that's the fact, is that digital entries can be gone in a flash.
It's a meme that we use a lot here in the gold and silver community too. Here is if you don't hold it, you don't own it. And it's like the Ayn Rand quote. And so you can trust this paper gold, I guess, if you want to, but at the end of the day, that's a fool's errand, because you're just trusting the same banksters that are going to manipulate it right out of your possession. You gotta hold it in physical form. Which leads me to silver. I wanted to ask you this. So you started a company called Silver Max. You sold it to First Majestic for what, $120 million?
Yep.
How precious is silver at $16, $17 an ounce? I mean, it's really ludicrous.
When I first met David Morgan, I was at a conference, and there was a big dining hall. And David Morgan said to me, this was back about 2008, I guess it was, and he said, you know, he said this gold silver ratio is really ridiculous. At the time, I think it was like 60-1. But he said if you took a roll of paper and rolled it out across across this big room, only in the last foot or so has the gold silver ratio been anything greater than 15-1. And here we are now about 75-1. And so I do think silver has a lot of upside. I like silver personally. I like the monetary metals. I like gold. I like silver. And I think it has a lot of upside to it.
Yeah. Well, I just still find it fascinating to this day, even knowing all of the endless manipulation in the paper markets that have forced silver down to these prices. When you see gold have a big day, you see silver have a big day. You look at the charts and they mirror each other. And it's one of those things that I've really had a hard time getting my mind around, because clearly they manipulate the heck out of silver, even I think more than gold to some extent. And still the charts mirror each other, which strongly suggests that silver is, despite what the banksters will tell us, it's still a monetary metal.
Oh, sure. Silver is a monetary metal. There's no doubt about it. When's the last time you really had any interest in a copper coin? I mean, you want a gold coin, and for investment, and for transactions, you want silver coins.
Yeah.
And I bet you the people of Venezuela wish they had a lot more gold and silver coins in their safes or underneath their mattresses.
Yeah, you got that right. Yeah, anybody who wants to see what hyperinflation of a currency will do to a population, look at what's going on in Venezuela right now. You know, Bruce, I read not long ago that in Venezuela right now, 1 ounce of silver will buy somewhere in the neighborhood of 4 or 5 months of food.
Wow.
Yeah.
And so the banknotes are worthless, and once again, even if they haven't gone up, they've maintained their value. So yeah, it's and I guess 4 or 5 months of food has probably gone up in value. It's a funny thing these days. There's a lot of tension out there, but for some reason, gold is getting taken down. And you think with all this uncertainty in the world that gold would be going up.
Yeah, you do. You really do. You think gold should be $1,500, $1,600, $2,000 just in recent months based on everything that's going on in the world. You note that those Venezuelan banknotes are worthless. I just read the other day that they're so worthless that shopkeepers aren't even going through the process of counting them. It takes too much time. They now weigh the notes when they're doing transactions with people. They just weigh it, which seems absurd.
That's terrible.
Yeah, and that's what hyperinflation does. That's what the banksters... See, here's the problem. When we give the banksters this much unchecked power, they abuse it, and they can enchain and enslave entire nations. And that's the problem with the Federal Reserve. That's the problem with QE. As Peter Schiff notes, QE4 is going to be huge if we're going to continue down this road. And eventually, what we're seeing happen in Venezuela, I know it's hard for people to believe this, but eventually, as all paper fiat currencies die, the dollar will eventually die as well. And if people don't have physical precious metals, I don't know what to tell you. I think you're going to be in really, really tough shape.
Well, put it this way. I guess the most visceral way of putting it is this. Would you rather have a $100 gold coin in your hand or a $100 paper note?
Yeah.
And there's just no comparison, right? You want that gold coin every time. So, and the gold coin is going to be massive protection for you in the event of hyperinflation. So, with all the money printing that's gone on, I mean, with all the money printing that we've had in the world in the last few years, but the problem is, the velocity of money hasn't increased. The money's not getting out into the economy; it's staying in the banks because of low interest rates. I'm not afraid of higher interest rates. They'll get the money working. It'll be good for gold, not bad. Well, what have low interest rates done for gold in the last 5 years? Absolutely nothing. So once we see the velocity of money improve, then we're going to see that all that money that was printed is going to hit the economy, and that's going to be very good for gold.
Yeah.
So bring on the rate hikes. That's what we need to get the gold market going again.
Well, let me ask you this. As the founder of 2 successful companies, one silver and one gold, I think, so there's Silver Max. You sold that to First Majestic, and then Timmins Gold. What made you want to get into the business of processing the ore with Inca One?
Well, it's a great business model. The problem with producing gold or silver is that you have certain fixed costs, and you have to find the gold, you have to drill it off, you have to take it to production. All of that is eliminated when you're a toll miller. You simply buy the gold at a discount, gold and silver at a discount from the producers. They bear the risk of mining it, and then you just pay them when they bring it to the processing plant. So you eliminate all of that, and you charge a premium. So it's a nice cash flow business, and the higher the price of gold and silver go, the bigger the premium, because it's on a sliding scale. So you make a premium, and if you're more efficient, you actually make a bit more money as well on your efficiencies. So it's a good business. But what we plan to do is use that cash flow. We're ramping up right now and should be into positive cash flow in the near future. We plan to use that cash flow to really have a good look at some good development assets. So it's a really good base. The company has a very tight share structure. It just paid off about $11 million worth of debt, and it's running a very successful toll milling operation. So the company's in very good shape. It just went through a complete restructuring. That's what attracted me to the company.
Well, Bruce, let me ask you this then. How does the business work when we know that there's so much manipulation and you get these kind of hold your breath moments where they'll throw $4 or $5 billion of paper gold at the market and crush the price $30 in a minute? Do you have to hedge? I mean, I know you're getting a discount on the ore you're buying, but how do you play that market when it's impossible to know on a day-to-day basis if they're going to throw billions of dollars of paper at the market and crash the price?
Yeah, you have to hedge it. Immediately upon purchasing the ore, you have to have the hedge in place. It's basically a pre-sale. I wouldn't really call it a hedge. It's more of a pre-sale than anything. So once you get it, you have to make sure that you lock in the price.
Okay, let me ask you this then. After you guys process the ore, where does that gold go? Who buys it, and what kind of demand are you seeing?
Well, it goes to a refinery in Switzerland, and it's actually not as complicated as it might sound. It just gets shipped by air, and the cost is actually quite low. With Timmins, we ship to Johnson Matthey in Salt Lake City. Mm-hmm. So there's a number of refineries around the world. The beauty with gold, and one thing I've always liked about gold and silver, is there's an instant demand and no marketing costs. You don't have to worry about selling your product. So once you produce it, you don't have to worry about all those other costs. You just have to worry about the cost of producing it.
Yeah, isn't that interesting? You said earlier in the interview, I wonder, hopefully this isn't the end of the gold market, but it's so clear to all of us that know about real money being gold and silver in physical form, the history of it, the 5,000 plus year history of real money, that there will always be people, central banks, other powers that be on earth that are more than willing to trade paper fiat dollars for the real physical precious metal. It's a business that will never die. And in fact, I think there is going to be a great awakening globally. And I think it's happening already, that people do not want to trust these central banks and they do not trust paper funny money anymore.
Yeah, look, my belief is that gold is going much higher from here. It's just you get so tired of this manipulation in the market. And I'm sure it's got a lot of investors in gold and silver really down and really wondering what the heck they're doing these days. I don't think this is the end of it. I really think that we're going to see a good bounce out of the bottom here. Mm-hmm. I've been kind of counting the days here, but this is a bad correction. It's a very long, deep correction. But it's a correction that was predicted by certain analysts that I follow, and their follow-up prediction now is that we're going to come out of this in a big way. They're just not sure when. So we should be close to bottoming here. Hopefully, we may have bottomed last week as far as some of the indexes go, mm-hmm. And I hope that this is the end of it. But let's face it, after five difficult years, we finally had 6-7 good months. I don't think that this is over now. I mean, I really don't think that. I think that we're going to be moving higher here. So, overall, I think this is a good time to get out your shopping list and look at quality companies like Inca One, and see which ones you want to buy. I know it's the farthest thing from a lot of people's minds right now, but you got to buy low, sell high.
Yeah, and Inca One is on the TSX Venture as IO, correct?
That's correct. Yeah.
Okay. All right. Well, Bruce, I really appreciate your time. You're obviously a straight shooter, and with 2 successful companies under your belt, you've already sold. Your third here is Inca One Gold Corp. It's on the TSX as IO. Bruce, anything else you want to let us know? What's the website?
The website is inca1.com.
Okay, and that's Inca One Gold Corp. Our guest has been Bruce Breganolo. He's the chairman. And Bruce, thanks so much for your time. I really appreciate it.
Yeah, thank you.
All right. And guys, thanks for listening. Check us out at sgtreport.com for real news 24/7. Have a great week. Then, on the evening of the election, it became clear fairly early in the night that Trump was going to win, and we saw markets sell off big time. I think at one point futures were down near 1,000 points. Gold was up near $100. And then in short order, everything turned around. So on one hand, we have the street, or the powers that be, telling us that Trump means devastation for the stock market and means soaring gold. And then within 24, 48 hours, everything had reversed. Gold was back down. The stock markets are through the roof. What's going on here?
Don't ask me. I really don't know. There's talk about the war on cash in India having something to do with it, but those are all backstories. I think it's all technical. The algorithms control trading these days. High frequency trading controls it, and I think as soon as they get some type of a flashing signal, they all pile in on it.
Right.
And I think it's actually the opposite of what you think these days. For example, everybody's fearing the rate hike, whether it comes or not. It's fully priced into the market right now, any market, I would guess. But when it happens, it may actually be good for gold, because then all of a sudden it's done. I don't think the U.S. economy is strong enough to sustain any further rate hikes. If there is one, I don't know if there even will be a rate hike. Mm-hmm. If there isn't, certainly the gold price will reverse dramatically. It might reverse dramatically anyway. Mm-hmm. You don't know anymore. It's all about. I think it really is these days all about technical trading, not fundamentals.
Well, yeah.
Fundamentally, there's a lot of demand for gold.
Oh, there is. And technically, the HFT, the high frequency trading, you hit the nail on the head. I mean, we're not talking like technical traders like guys like me and guys like you sitting around manipulating. We're talking about Wall Street insiders, hedge funds, high frequency trading, using the algorithms to set the market price where they want to set the price. Okay, you mentioned India, and I want to get there in a second. India going cashless. I think that's a very important story. I want to ask you about that. But let me read you this from Peter Schiff as it relates to.
The COMEX has nothing to do with gold. That is simply a casino where gamblers place their bets on the gold price. So I don't know why that has anything to do with fixing gold price or anything to do with gold whatsoever.
Hey guys, thanks for tuning in. I have an exciting call for you. I haven't done a gold-silver talk in quite a while, so I decided to get Bruce Breganolo on. He's the chairman of Inca One Gold Corp. He's the real deal. We're going to talk about gold. Bruce, how are you?
Very good, thanks, Sean.
Hey, thanks for coming on. I want to just ask you right out of the gate. Inca One is a gold milling company, so you guys process the gold. So you don't have to get out there and you don't have to search for it. You don't have to do the exploration. You don't have to pull it out of the ground. You're in the business of milling the stuff. What are your impressions today as we're having this discussion with gold at $1,174 an ounce? It just seems like the beatings are going to continue until morale improves, huh?
Yeah, right. Well, it's certainly gut-wrenching right now to see what's happened in the gold sector. But, there's a lot of analysts that I follow that were calling for a drop into this level and a big bounce right back off it. So I certainly hope that they're true. I mean, when I was looking at their predictions back in, I guess it was late September, middle to late September, and actually some even back as far as August, when they predicted that we would hit these levels, I thought there was no bloody way, right? But your instinct is to continue with the trend, and the trend at that time was flat to up. But since then, sure enough, some people have better predictabilities than others, and here we are. So I guess, I guess you got to follow some of the analysts, and you've got to be aware when they're calling for lower, for a big correction, which takes you to levels that you didn't think possible when the market's going well. The good thing is this might be the maximum pain right now. Some of the ETFs are in very bad positions relative to the gold price right now. So you think this would be a good time to be buying, but it goes against investor psychology, of course, that to buy at the buy at the bottom, because you're paralyzed with fear basically. But this is the type of reaction that the big banks, the so-called smart traders that trade on the equipment of traders, you see the reports every week. I mean, they're all out of the short trade now, and they're into the long trade, and they're going to be making a pile of money on the way up here. So I really hope that this isn't the end of the gold market, because that would be a real victory for the central banks. Yeah. They're really trying. That's the biggest problem right now, is that the central bankers and the big banks, they don't want to see cash. They don't want to see gold. They'd rather push us all into electronic money so they can just keep printing without anybody really seeing the impact of it.
Yeah, no.
I think there's going to be a pushback. There's got to be a pushback on that, and I don't think the Indian populace is going to let anybody, basically confiscate their gold. So there'll be a revolution there. So I think we've hit a lot of very negative factors for gold all at once, and I think we're going to start seeing some pushback here. So hopefully that'll happen sooner rather than later.
Yeah, I can assure you this is not the end of the gold market. I mean, and here's why we know that. Those of us in the know understand that the central banks are trying to get as much gold as they can. Russia, China, trying to get as much gold as it can. Germany wants to have its gold back, that the New York Fed is certainly dragging its feet in delivering the gold back, the U.S. dollar. One of the reasons I think we're seeing gold priced at, as we talk today, around $11.75 in U.S. dollars is because it's priced in U.S. dollars. If you're dealing with some of these other currencies around the planet, the price is much, much higher in those currencies.
Sure.
And in many cases, hitting all-time highs. Right now, the dollar is, quote-unquote, some safe haven. Peter Schiff wrote on Thursday, increasing the maturity on the national debt is good, but it will add hundreds of billions to annual budget deficits. How will we pay for it? And he followed that up by saying, if Trump's nominee for Secretary of the Treasury is serious about lengthening the maturity of the national debt, QE4 is going to be huge. These are the things we now need to consider. As this nation's $20 trillion in debt, and that's just the stated debt, guys like Peter Schiff, guys like John Williams, the smart folks out there that crunch the numbers are worried about the potentiality of hyperinflation of the dollar. Because apparently the plan now is just to print.
Well, I think Peter Schiff is a very knowledgeable guy. But, you look at all the markets right now. The U.S. dollar has really been on a tear since the election. The U.S. stock market has been on a tear, not for any real reason, just that technically, I guess it's time to be on a tear. So you'd think that those things would, that those two indices would come back to a mean, and hopefully gold will come back to a mean as well. So you get, we got overbought conditions in some of the indexes and oversold in gold. So really, it takes a real gut check right now to be buying gold. But some people are saying that this is the bottom and this is the time to get in. So it's just very gut wrenching. But every time it gets, it's almost like the powers that be that impact the gold price, whoever they might be, want to inflict the maximum pain on people.
Yeah.
And all of those analysts predicted that if we can maintain these levels now, we're going to go much higher in the next few months. We should get a big bounce off of this and go higher. So they're still sticking with their original projections. They're they're shaken and stirred, but we're still calling for a bounce off the bottoms here. And I don't know exactly where the bottom's going to be, but it bounce off the bottom and then it move up.
We do talk a little bit about technical analysis in some of the interviews I do, but we've kind of thrown it out the door to the degree that some days, Bruce, as you well know, some days we'll see $4-5 billion of notional gold, paper gold, thrown at the market. We'll see this thing crash $20-30 in a minute because the banksters just throw paper at the price. So technical analysis is kind of thrown out the door when you know that there's this much manipulation going on behind the scenes, and you're in the business of dealing with the real stuff, the physical stuff. How precious is it in your estimation? How precious is the physical stuff versus the hypothecated and rehypothecated paper stuff?
Oh, don't get me going on the comics. I mean, the comics has nothing to do with gold. That is simply a casino where gamblers place their bets on the gold price. So I don't know why that has anything to do with fixing gold price or anything to do with gold whatsoever. It's just the claims. I haven't checked the number of claims on each ounce of gold in the comics, but I think they're well over 500 now. So 500 to 1. So I don't even. I think the COMEX is a very faulty mechanism for pricing the real physical, tangible gold. And let's face it, to me, buying paper gold, that defeats the whole purpose of it. And you can find any number of commentators to comment on that one better than I can. But yeah. There's no reason to own a paper gold or claim on gold. You want the physical thing in your hand. That's the whole purpose of it.
Yeah. All right. Well, you're a kindred spirit. We're speaking the same language here. The COMEX is a casino. That's a great quote. And let me ask you this.